Hello, Mish. Happy Monday. And we've got a lot to talk about to follow up on our energy conversation last week. We're looking at USO, and if people remember last week, we were focused on the fact that it was undervalued, or let's say underperforming, and then it's taken off, obviously because of the Iran Israel war going on. But how are you feeling about it right now?
Well, what's so interesting is that people are still bantering, at least on X, about the bearishness scenario for oil and that there's still a lot of supply and this is just temporary. And people started shorting it today. And most of these people either A, have never traded a contract of oil in their entire lives, number one. And number two is they also probably have not lived through Middle East crises, at least not old enough to remember them, right? The last one being, well, I guess you could kind of say Afghanistan, although that really wasn't Middle East. So really, you're talking about the last real Middle East conflict that would have affected oil would have been back during Persian Gulf, right? I mean, that's a
That
long
certainly would be
time
the
ago.
biggest, yeah, that would be the biggest one that comes to my mind, most
Right.
recently.
And if you go back to 1990, when you had the Kuwaiti situation, this is sort of similar in that you knew it was probably going to end, but that doesn't necessarily mean that oil would have a 1 day or 2 day spike. And that's how I'm looking at it. Forget about headlines, because I read today the war is escalating, and then I read the war is de-escalating, and you don't really ever know what the truth is. It's kind of like tariffs. That's what it sort of reminds me of. See so many headlines, you have no idea what's real, what isn't. But what is real are the charts in price, right? So what would I do right now? First of all, you're looking at a daily chart. So you can see a couple of things. We mentioned last week, Jeff, that it had two closes over the 50. And for that reason alone, after a nice double bottom action in April and May, it was worth following with a super tight risk. And that's exactly what we did, by the way. And of course, you can see that it took off because of the war. I mean, you don't always get help like that, but in this case, it did. The question now is, we talked about some areas of resistance. We talked about $75 as an area of resistance. We talked about the 6 month calendar range low as an area of resistance. And now here we are above both the 75 level and the 6 month calendar range, and those few days work that you saw in the beginning of April before it had the big gap down. So that tells me that all this is some A, profit taking, and B, consolidation, or at least a pause until everybody knows what's happening with the Middle East. And if you look at momentum, of course, that took off. And of course, it's
Yeah.
outperforming the SPY. So if you ask me what I would do now, I did not take any profit. I'm still in it. What I decided to do because of the conflict was have a trailing stop as opposed to a profit target. That doesn't mean that if it got up to 85 or 95, I wouldn't take a profit. But right here, I don't see any reason to. So what I would do now is probably have my stop to take some profit, maybe right under 75. Remember now, we're long at 69.90. So it's not as big a profit, but it's still a profit. More importantly,
Yeah.
it gives us room, if it does hold and turns around tomorrow, to still be in it with the original position sizing. So this is how I would play this right now. If I were day trading, that's something else. But from a mini swing trading perspective, I would have a profitable stop and I would hold on to it. And would I consider adding? Potentially. Maybe at this point now, looking at the crude oil futures, they held around 69.50, $70 today. Maybe if it really looked like it was going to hold 70 and take off in the futures, I might be inclined to at least add more for a very short-term type of position.
hmm
What I
So
don't
you,
see is bearishness, and this is why I'm a little baffled at all the bearish calls that I saw today.
yeah, well, I think that market participants have been pretty um, desensitized to these extreme jumps in, I think, especially in crude that just don't materialize in the short run. So if it Is there any place up here that you would just say, you know what, I've had enough. I'm definitely taking some profits.
Well, I was really studying the futures charts today, and I was looking particularly at the monthly charts, by the way, because if you look at the monthly chart, it really does look like we had this massive, and you could probably look at the monthly chart, see it here and see
I'm
it
gonna
similarly.
try.
So let's go to that. So, I use the 23 and the 80 month. That doesn't necessarily, it doesn't matter. Let's not look at the,
Yeah, I haven't changed it
doesn't
here.
matter. We just look at the formation. And if you're looking at this formation right now,
Yeah.
you've got really basically since 2022 to now a very nice bottoming potential pattern with a neckline breakout, not so far from
Yeah.
where we are right now.
Right. Like right in there.
Right,
And
exactly.
then here's like another level up, but that's
I wouldn't worry about that so much. It's right.
yeah,
It's really where you
that's 2 years. Yeah.
That's 2 years. We get through that. So what's the measured move on that? You're really talking about something like 60 to 80. That's $20. So that
Yeah.
would put you up at around 100. And around 100 in the USO would equate to about $95 a barrel or 85 to $95 a barrel in futures. That's where I would take some profit.
All right. Yeah, that's a move.
Either, like I said, either at this point now I'm committed and I get out if it breaks down under, let's say, 75.50 in the USO, or and I lock in money and that's it, end of trade, or I go full hog and if it takes out that line, I add to it and then take a profit on that next pop.
Hmm. And is there anything else you're looking at to kind of confirm or warn you that maybe this is going to happen or isn't going to happen? So I'm just
Well,
looking at the weekly here to see.
again, you're back at you're with the weekly chart
This
now.
is weekly just to see if there's any like
That's
real.
some nice breakout too. I mean, you're above the 50 week, you're above the 200
Yeah.
week. I mean, this is a back in a bullish phase. So I'm saying, your question on is there anything I see
Is there
that,
anything else you'd be looking at? And I don't know the answer. I don't really have anything that comes to my mind other than the futures, which you already pointed out. Keep an eye on the futures because they often have a slightly different look. But
well, look at
um,
this action going back from 2022. I mean, people are calling this a top. To me, this looks like a massive beginnings of a bottom. So, it depends on how you look at a chart. But after it made its initial move up in 2021, really basically since the peak in 2022, we never really got below those 2021 levels. We're kind of like, I think, been basing. And even though, listen, from a environmental perspective, it would be maybe the blessing would be oil to get really expensive because it would finally pull us away from oil, and then that would be the end of the move. But for right now, I think this could catch everybody off guard. I really do. And maybe this is what Warren Buffett saw with his massive position that he's been sitting in forever in what is it,
yeah,
Exxon?
Oxy.
Oxy, right? Oxy.
I don't know if he's still in it, but yeah, yeah, you're reminding me. I haven't been looking at them. This is the weekly. Well,
Right.
that is where I was going to go. I was going to go to the OIHs and see if there's anything interesting there.
And also you should look at XLE because that's really the energy.
Yeah,
Really what we're talking about is what I've been talking about, which is all energy sources on deck right now. We don't have enough energy to power our grid system. If we have a rough summer, we go into hurricane season, we don't have enough power to do all the AI and data centers. We just don't have enough power right now. And even though uranium's made a big move, what I keep saying is we're still pretty far away from being able to have our nuclear as our energy source. So the research I did is natural gas, and we definitely need to look at that,
yeah,
is
yeah.
number one in this country. Number two is solar and wind. Solar made a huge move last week. We talked about Solar Edge too, I believe.
Right.
Number three, and number four after that is oil. So look at energy, right? It's poking its head over the 50. Is this a weekly
Yeah.
chart? Yeah, over the 50-week moving average.
Yeah. And that level lines up with these prior highs here.
And if we're not going into a recession, which many people do not believe we are, which certainly you can make a great case for that, why wouldn't energy go up? It's what people need. In a booming economy, and the demand for energy only goes up, not down.
Yeah, well, let's go look at natural gas, because that is one of the sources of energy that people have been pointing to power the grid.
And
And
not only that, it's sort of like the oil story in that the producers, it was so cheap, the producers did not want to create any more oil. They didn't want to drill and they didn't want to refine. It was going to cost them money. And I was thinking, at what point are they going to say the same thing about natural gas trading at $3.50? Well, today it went up to $3.74 in the futures. I'm looking at 380 as the breakout, but here's on. Now, UNG has been up and down this 50-day moving average quite a few times. Oh, this is the weekly. Let's go to the daily
oh,
first.
sorry, yeah, down. Whoops, don't do that here. Yeah, yeah. I mean, we've been looking at this since this bounce off the 200 here 2 months ago.
And look at how many times it bounced off the 6-month calendar range low.
Yeah.
So this thing has massive support above 15, massive support. So now you have to say, okay, where's the breakout? I like to look at the futures, like I said, 380. I have my trade station alert system set, I think, for 1735 or 40 in the UNG as a place to start looking at. And you have such a good risk, just risk to under today's low. That's it.
Mhm.
Because if it fails the 200 again, why bother?
Yeah, yeah, and if well, my philosophy on stuff like that is if you keep your losses, if I keep my losses small like that, I'm happy to get back in if it goes back up. If I get stopped out and it just goes back up, I'm happy to get back in.
Exactly right. That's how you have to play these commodities right now. It's what got me into oil. If it broke down back under the 50, I was gone. It's what's gotten me into a lot of different positions because when I like this, this is my favorite setup, is a phase change, and you know you're wrong right away, so you're risking very little if the phase change doesn't hold. And if it does hold, then you're really getting in at the beginning of a move and not when everybody's talking about it.
Hmm. Yeah. Um, I wonder what well, I'll look at. That looks great. 17
Look at the high
this high right
from,
here, right?
let's look at the June high so far, right? You just put your cursor there. So like I think it was like 1735, 1740, something like that. We get a close over that. I'm in. And my risk is to whatever today's low is. What was today's low?
So let me see if I can get that number high. Yeah, 1734. Today's low, 1651.
Okay, so
And the
less
gap.
than a dollar, 80 cents. An 80-cent risk in something as we know, this can be just as explosive too.
Yeah, I mean, if this takes off, 25.
Mm-hmm. Yeah, that would be a great little trade.
Yeah.
And by the way, I always say to people, it's really hard to root for oil and gas and commodities in general to go higher because you know they're going higher is going to hurt. It's going to hurt inflation. It's going to hurt people's pockets. It's usually on some kind of conflict like we're seeing where people are getting hurt, physically hurt, not just financially hurt. And that is something to reckon with. So that I always tell people that if you're going to buy things like this, the way I like to deal with it is think about the fact that you can do something good with that money. Whatever that is, you can do something good. Give to a food depot if you're making money off of food commodities. I mean, you're not going to, go stand online at a gas station and the next car that pulls behind you say, you know what? this one's on me. I've done that. So that's kind of how I deal with the conundrum of being a commodities trader.
Nice. Yeah, that would be fun. So do you tell the guy that you just made it betting on the price of crude oil going up and
I don't
this
even
one's
tell
on?
them. I
Yeah.
just say this one's on me. Or if I'm online at a grocery store and somebody behind me, you can tell when somebody is worried about how much it's going to cost. Just say to the cashier, I'll pay for the one behind me too. I mean,
Yeah.
just what you don't have to impact the world, just one person
Right,
goes
right.
so far.
Nice. Well, speaking of commodities and food, let's go over to DBA.
Which is the topic of my daily. So,
Yeah, which is
you can see I'm kind of on a theme here. I feel like I'm a little bit a lone wolf, but I'm not. There's a few other people who are also talking about this because I get constantly argued with that we're actually going into deflation. Because let's just look at the PPI, just look at the CPI, blah, 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 blah. And I could care less about those numbers, right? Because I don't even trust that they're real. They don't include food and energy. So let's start with that. So this chart really interested me today because soybeans I talked about last week, they made a really big pop. Soybean oil is screaming higher. Live cattle has been on
there's
all-time
soybeans.
highs. I mean, just go buy a steak these days and your eyes are going to pop out of your
Oh,
head.
geez, yeah.
Yeah, I mean, I went to Costco and bought 3 pounds of meat for $75. Now, it
Wow.
was a ribeye, wasn't a cheap cut, but still. Last time I went to buy three pounds of meat at Costco, which was a few months ago, it was like 55 or $60. That's a huge jump.
Wow.
And
Yeah.
now, yeah, there's your soybeans.
There's
And
soybeans. I don't know live cattle ETF. Do you?
I think it may be moo. Check out moo.
That would make sense. Um,
Oh, it's
oh,
agribusiness. Yeah. No, that's not, yeah, moo. Try moo. I'm not sure if it's
yeah,
moo.
it wasn't moo, that was ags, but
Could it be cow? I don't think so. I'm not sure what the ETF is for that. But while
I don't
you're
know if
looking,
there is one actually.
it may be, yeah. But while you're looking at that, put up cane because the other thing that was
Yeah.
interesting, y'all know I'm like totally obsessed with sugar. Not that I personally eat a lot of sugar, nor do I believe with the diet drugs that I think people are reducing their sugar intake. But I always look at sugar as a great geopolitical sign of stress and social stress. And this was a massive turnaround today. This was one of the best turnarounds we've seen in sugar in a long time. The last time it did this kind of big range, high
Yeah.
volume turnaround was some time ago.
Wow. Well, at this level this has been the spot
This has been the
since
spot.
11.
So I haven't heard any stories about it yet, but all I can tell you is that now I'm back to interested in sugar. If you just spread it back out again.
Yeah.
I mean, you could look at it through DBA, but if you wanted to be more specific, you left a beautiful glass floor. Is that what we call it? Or what do you call this? A brick wall bottom? Just, a good slingshot bottom.
It is.
Slingshot
Yeah.
is the word I was looking for. You're about to get a mean reversion in the real motion. Look at that.
Yeah.
And it's not that far from going back to taking leadership over the SPY. So I think that this is something to be watched. Now, if you want to look at it in terms of the futures, that also, just like we just talked about with not
Natural
natural
gas.
gas. Was it what are the price DBA, I think. That thing has to take out $17 and
Yeah,
basically
1734.
yeah, and so does sugar, about 1734, 1750 sugar futures.
Oh,
We'll put this probably back over the 50-day moving average.
natural gas was 1734. The
Oh,
DBA.
UNG, right, right, that's right,
Oh, sorry, UNG.
right. I don't think we really talked about DBA yet because we wanted to talk about cane first. Yeah, this was 1734. Sugar
Right.
futures, by the way, not cane, but sugar futures Same thing. Takes out like 1735, 1750. It's worth paying attention to because that was the breakdown area. And now it would be back through it. I think there's so much exciting things to do with commodities right now. I'm like beside myself. I can barely sit straight. I should say sit
Um,
straight.
so would you buy them just with the ETFs?
You can. Absolutely. Just
Um,
always watch the underlying futures as a way to really gauge, because the futures will tell you before the actual ETF because of contango and all these other relationships that it has, because it's mixed with sometimes treasuries and dollars, and it's not just a pure commodity play.
hmm What's the symbol for sugar in the futures again?
SBN
Right.
25 would be July.
Okay, here I can flip over here for a second. Um,
I don't know. Again, I think, oh, you go on Trade Station.
I'm
Okay.
just going to trade station
Oh,
and
look at that. No, is that
that's this
that?
is the daily.
I was going to say that looked too explosive.
Yeah.
So yeah,
Um,
spread that
yes.
out a little teeny bit more. Yeah, I mean, the last time we had that kind of reversal, you can see was in the beginning of 2025, which led to a move from essentially the same place this started all the way up to almost $20. So that's a big move for something like sugar. Remember, this is cents, not dollars,
hmm
right? You have to remember this is 16 cents a pound, 20 cents a pound, as opposed to what we look at when we talk about oil or we talk about ounces like gold or silver. So yeah, I got keen eyes on this one, that's for sure.
Yeah, and this closed at a new low. Um, I like that. Closed at a
Yeah.
new low before we got this reversal.
We also have a great bullish engulfing pattern there in
Yeah.
terms of the candles. So
Yeah.
yeah, everything
So
about this tomorrow has this high on my radar. And
yeah.
that's what gets me over like, oh gee, I missed the move in AMD today. I mean, those things are hard to catch. You've had to live through a lot of pain and a lot of volatility. And if your timing isn't absolutely exquisite, you miss it. And if you pay up and something happens to turn it around, you lose money. These things are bottoming. These are the types of plays that I live for. And this is why we're doing this podcast, is so that you guys can be aware of it too. There is money to be made. It's not a stock, it's not an investment, it's a trade.
Right. But on just under $17, $3 move up to 20, which wouldn't be all the way up. That's pretty substantial. $3 on under 17. It's almost 20%.
Exactly. Exactly. So
All right. Yeah.
watch sugar, watch natural gas, watch sugar, and watch that oil, because don't let anybody tell you the move is over. It's not over until it breaks down. All it did today was shake out a bunch of week longs, and as far as I'm concerned, retest support.
Right. Came right back down to this whole bunch of support down here.
Right.
Yeah. All right.
Okay, this is
That's
your
great.
commodities time with Misha and Jeff.
Commodities. That's right. Are you diversified? Awesome. Well, thank you very much.
Thank you very much.
I think that'll call it a wrap for today. Bye for
Okay.
now.